Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino, Stock Overview stream. If you want the stock market overview and generally the market's overview, we did that a little bit ago, and Bob Iacchino was on here. So tune in for the replay. How is everyone doing? Hello, hello, Wavy. Hello, Tesla Force. Hello, Amit. Welcome back. I hope everyone's doing well too. Tech once again among the weakest. ARC down 6.36%. And hey, Didier, how are you? Yeah, we can take. Here's ARC. This is why I hate this, against the daily rotation zone, rotating back down. Look at that 62.5% level. Look at that 62.5% level right there. So keeping an eye on that. But this is why I don't like to play these first bounces off of here, because back to the weekly rotation zone, back to the weekly, into the daily. Now you get back above here, there's definitely a potential very quick long play, although I wouldn't do it in ARC. But the same thing I wanted to show you with, I talked about this, like with PayPal, back down below the 62.5, by the way. Here's where you had to be. You had to buy the first half of this day to be right. Otherwise, you are underwater again. This is why it's so challenging. I've talked about this multiple times with people who will, look, I could have made this, but did you sell here? Because it could have just been a pullback. Then you saw this. Oh, okay, I'm fine. Now you have this. And unless you got in, see here? Pretty much before this pausing, but I mean, even not, you'd have to get in before noon my time. Otherwise, you're break even or worse if you bought any of this other time up here. That's why I'm saying it's hard to trade, trying to call bottoms. Wait for your reliable patterns. Otherwise, your timing has to be impeccable. All right. Let's see. Not the best environment for most tech right now, I believe. Mike, can you recap the significance of retracements at 62.5%? I watch on all different time frames, pullbacks off moves to between 50 and 62.5%, and then rotations back up. Okay. Once you start closing below 62.5% on a closing basis, it favors a retest of the lows. Because why? Because generally then we can get double bottom patterns, which are much more reliable. So that's the way it tests out. It's why it's used it for gaps and everything else. You see me stress that so often because of the work I've done over many years. Again, I started for newer people here in 92 with this. So you have, we're 30 years at this point. 30 years. And I was doing systems testing back on a IBM computer, 386 computer, 486 computer. I don't even remember what it was way back then. Intel 486. Were you in TradeStation way back then? And then we had a dedicated machine with one of the companies I worked for where you programmed your systems in Pascal. Or anybody remember Pascal? You want to talk about a defunct language, but luckily I took Pascal. It was actually in a class that I had to take in college, so I actually had some Pascal programming experience, so I could write the systems. So on a candle close below 62.5 from the prior move favors a probability of a retest. Yes, I watch for a retest of the low area. It doesn't mean it has to go to the lows, because remember, we can pull back to the low area and possibly make it double bottom. But I start favoring it means it goes into less and less bullish mode. Okay. Now, if we pull back between the 50 and 62, worst case, and then we get a nice strong rotation back up. For example, if we got technically a close over this high candle in PayPal, that would be an aggressive entry. Why would it be aggressive entry? Because we're still against the daily and the weekly rotation zones. But it would be an entry. However, you start getting below that 62.5, I stop with the long trades and watch for something like a potential double bottom, or if I'm really bearish, continuing short plays to the downside. Other stuff let's get into real quick. Tesla. I know people love me talking about Tesla still, but Tesla, we went back. Sorry about that. Before I do that, actually, if you're new here, please do consider subscribing and ringing the bell and hitting the like button. Longer term viewers, please hit that like button and leave some comments. All right, that's out of the way. Now, Tesla, you can see back to the daily rotation zone here, and was watching for a potential break to the upside, did not get it, could not get above these highs, and just a little pop up. But when the market started reversing, came back to that support level we talked about in the last video, that 850 area, and then back below that. Next line in the sand for me is about 830. We go below 830, we still have a little gap play here, but I'm targeting 800, 795 to 800. The only thing that changes is that macro perspective. It's back to the 200-day also on the daily. So keep that in mind. And this is an advanced clear path move. So we start getting momentum down below this 200 again. This could see some substantial downside pain again at this point. Just keep that in mind. So if you're only bullish and you've caught some of this move up, know where your stops are. All right? And there's no buy pattern sets up on the daily. On the 4 hour, there would be an aggressive buy on a close above this 4 hour high. I'm not touching anything unless we're strong with the NASDAQ or anything else. And even with this, you see here spiking up into the weekly rotation zone and so far lower. And I was asked again by Ken, what about he knows one of the things I trade with a weekly potential buy setup. Why I'm not touching it even if we close above last week's high is because we're still against the rotation zone in a very bearish macro environment. So there's Tesla. Mike, if I could go back in your trading career, is there anything you would do differently? Yeah, more of my research that I did sooner because it works. And it would have saved me time and pain trying to learn some other people's technical stuff that was just garbage. Mike, can you draw the reverse harmonics on Tesla to show the key levels prior to the clear path from the recent top and the current sideways channel? You want the down harmonics? The reverse harmonics. See, there's no, the way on the 1 hour. So I would just use the forward harmonics on this because the reverse harmonics, you know, here's still your key high. And there's you could go to this pause, but I just use your retracement harmonics. If you want the other ones, first it would have been to here. Let me get to the harmonics, which look at those levels. Look, bam, bam. Now, if you want some I'd just go with the forward ones there, but I'd also put up your retracements from here to here. And look, here's your cluster right there. 37.5% with that harmonic. 818 is your next key level to the downside. And then here's your key 50% is 795, which I already talked about with a significant level. And below there's your 62.5 at about 770. So that's all the key levels I'd use. Now on a rally, you see here, I'd be watching based off the 1 hour. You have this breakdown zone and the harmonic at 850 with the rolling over rotation zone. Above there, if you did get a little pop in a long trade, this is where I'd use that 12.5% to the upside, the 866 area. Then above there, I'd target the most recent high area, especially with more so with the candle bodies than the wicks. So that's how I'd round out the analysis on Tesla. You see how those harmonics, both between the retracement harmonics and the forward harmonics, can line up to give you fantastic levels? This is why you got to use this. I know some people have really started to master this. When you look at a clear path, you look more at the daily, more than 4 hour, 1 hour for pausing bars. First of all, the higher time frame of clear path, the more important it is. Remember, a pause on a daily is much more important than a pause on a 1 hour. Now, if we're into a long clear path move, for example, I guess we're going to do some teaching here, like this clear path move. And this is an advanced clear path move because of this thing. All right, I'm going to drill down because it doesn't mean we're going right down here immediately. So then I'm going to go to the 4 hour. And where's my pause? Look, there's a pause right here, but we're still in an advanced clear path move. You can have an alternate colored candle in an advanced clear path move. So then I can fine tune that on the 1 hour, and we're closing into this area. So here's the pausing area that I cannot ignore for if you're going short for lowering stops. And especially look at the bottom of this little pausing area, 50% retracement and a prior significant level that was already on the chart before I drew this. Very key area. So that would be a major area for shorts. Or if you're still bullish and wanting to try to find a bottoming pattern, that could be a key area to look for. So there, that's how we do that. Let me get to some other stocks. I know William wanted Apple from before. Apple came to this flat rotation zone, but this is where I start really working with this. I'm going to bump this down a little. From there, gap up and now close back in the rotation zone. Apple. Now, the only way Apple short term, if the NASDAQ was really strong and tech, we were getting another rally in tech stocks above today's high. We are into this little move up here. So there would be a slight play to the upside. Okay, you see here, possibly to 172, 172.50 area. That's the only thing. Other than this, your major support on Apple's back down at 162. But other than that, there's not many great patterns right here. There's just checking the shorter term charts. That, yeah, you're back below there. If you wanted a shorter term play, see, here's another clear path move. Now, this is also how I can fine tune this level. And technically, that's right. That's your key. So on any short plays, here's your little short area I'd be watching, 162.86, so roughly 163 for a pullback. And then you start getting below about 162.50, you're into this longer clear path on the 4 hour. Here's another thing. Clear path on the 4 hour. So you see here, now here's a pausing area. So let's pretend you were going short here. Where would I'd want to move this level? Somewhere in here. There's technically a zone here. So that would be my next support zone on any shorts or targets for shorts. All right? You see that? Boom. Now, to the upside, I already said there might be a little play above today's high. And look at this, is without even looking at this. You see this? You see what I was seeing? And then you have this little gap. And I identified that just on the daily right here. But then we can go down to that 4 hour. You see it right there. And that 1 hour. So why do I love trading into these kind of moves? Now, on this 1 hour, on any long trade, I'd then at least move up a stop at 170.70 area. Why? Because it's this prior breakdown zone. And it was confirmed with this little spike high. So you see how we can identify stuff on the higher time frames and then drill down on the lower time frames and help us to really identify before we're even in a trade. And I've stressed this so many times. Before we're even in a trade, we've identified key target areas. And targets can be used to raise stops and or take profits. So there you go. We've analyzed the key downside area where I'd look to get short. You've analyzed the upside area, and these are shorter term trades because why? We're in the middle of a bigger consolidation pattern. So these are, I call them swing trades. They can either be possibly a little longer duration day trade or a swing trade. But if we're sitting in this gunk right here, and I'm calling it gunk, that's my new technical term, it's there's nothing to do. So if we open tomorrow at 166.73, I'd be like, oh, well, not going to do anything in Apple yet. Thank you, Amit. Thank you very much for the super chat. Again, thank you for supporting this channel. Very, very wonderful supporter. I really appreciate it. Let's see what else. What else? I'm just looking at back again. Christoph. I'm not ignoring. I'm scrolling back through comments I just sort of got on a sidetrack there. Hi again, my horse trigger on CSX. Do you see a bull pattern too? CSX. That was a shorter term thing there. Ooh, that would have been a really nice potential play. Let me take off some of these prior harmonics. This is one I was watching for a longer time. Here's your thing. Yeah. CSX. Yeah. There is a slight bullish play here. That close, do not love that close, but it's still, you cut through this area, you're into this area, so you do have some stuff there, and you're closing above the candle bodies on this horribly sloppy horizontal channel. The one thing I don't like, so this would not be my first priority play, or if I was going to play it, it'd have to maintain some momentum. So this would be something I'd be willing to look at on upside momentum, get in intraday, and then if you get a strong close tomorrow, roll it into a longer term position. What I don't like is if I could draw something. Boy, I'm dyslexic again, sorry. Little tip, you can draw your harmonics on a candle. We closed below the 50%. I would have rather seen the close really up here, but below the 50%, think about that. Over half the move was wiped out, just barely. But I noticed that just from my eyes gravitating to it. So, does it technically get in here on a horizontal channel breakout? Yeah, but it's a weak closing horizontal channel breakout. So again, this is where combining multiple time frames. And look at this little double pattern that triggered. I'm glad I went down to the different time frames. See this little double? This is where you put your analysis together. So could we even pull back more? Yeah. Now this could be an interesting play. Because here we're going to get the first cross the rotation zone out of horizontal channel, already chipped away with it. So if it goes to the downside continues, there might be a play on a rotation back up that can give it better entry. That being said, let's say we don't even get to the first target. Now this is where when a pattern doesn't work, it's generally showing you that the market is strong. So why could I say if this pattern doesn't work? If we don't, you've heard me say this before, if we can't get to this first target area on this double top, which has been triggered on the 1 hour time frame, and we get bullish play tomorrow, then it's something I'd go with intraday, especially you get back above about 35.80. You start getting a strong move push above 35.80, then I'd look to get in it, and then it possibly, if it continues throughout the day and you get a really strong close, that would be a carryover trade for me. You have a gap here. You are into this advanced clear path move here. And you have two key areas to watch for. I hope I'm not boring anybody here. So first area, this would be the breakdown zone, 36.30 and then 36.74, and that gap is going to be a magnet. So that's how, because I could use these targets. The first one would be for stop. I'd personally move up a stop. The second one, I'd take something off and move up a stop again, and if it remained bullish, I'd target the 37.50 besides using harmonics. If you want to use harmonics in there, look at that. Guys, you can't make this stuff up. I couldn't have made this stuff up if I tried. Look at that. Cluster right there. This is, so if you didn't even know that this was a great target and just you learned to use your harmonics, look at that. And look at this. Does it mean it has to go there? No, you still have to manage your stops and everything else. But look, we just clearly identified great targets to the upside, and I showed you how to play it intraday using the patterns. Now, if that's not worth something, then I don't know what is. ISRG is also another. This is nice. This is nice. This is even playable. Now, against that 50, first cross rotation zone, sorry, with the dogs barking in the background. First cross rotation zone, so even on a pullback from the reaction on the 50, this is definitely buyable. This is definitely, and I can't give trading advice, from my technical analysis perspective, this is a buyable pattern. You had a gap, filling the gap, creating this resistance shelf. Again, tested here with the key close. 2 pausing bars, inside bars, break above it, reaction at the 50. It's why we watch the 50. Now you get a power move back above here. You're into this move up here prior to the 200 and the breakdown zone. You get a nice little pullback. So we have some weakness. You get a pullback, first cross the rotation zone. I watch for a resumption of trend play. You already softened up the 50. Where would a stop level have to be for me? You start breaking below 276.50. That would be the trade. And remember, stops are where the trade's probably wrong. Now, I just want to see. I might bump that down a bit just to a 50% level, but somewhere in here would be a stop level. Why am I not going to this high? Because I wanted to see based off that channel, based off this corrective channel, where it would come to, and it's just below this key level I identified on the chart. So that would be my stop area. Again, educational purpose only. Moving up, you got a great first target here. Can you put harmonics on here too? Yeah. See, your first area you would have looked at was right there. First stop, look at that with the 50. Didn't get to the next harmonic. At this point, I'd just update it with this little pause to see where that lies. So you can easily, next stop area I'd raise it to, lining up with this key gap open, 310.54. That would be a stop raise. Then all up in here, I'd fine tune again, and it would definitely be a stop raise, and I'd definitely be looking to unload something because we get a possible pullback there. There's another great example to the upside. So my main system is rotation zones, harmonic, and Gann levels. Well, I call harmonics or anything in 1/8 increments. Both were traced, but there I'll just call them harmonics. Sometimes I call them Gann because people are more familiar with that, but he never taught that exactly the way I teach it. There, I came up with this myself. So yeah, that's my, and then I use like some %B entries. I use divergence trades, but that's just helping fine tune off this. Because, all right, if you stripped away all indicators, I could still trade with this stuff. Just if you just gave me a chart and a calculator, I could trade with harmonics, retracement, and extension harmonics. If I could only add a couple other things, I'd probably put on a couple of the key moving averages because I love these rotation zones. Because look at this, declining rotation zone, into rotation zone, moving back down. You say, oh, I couldn't get above that 21, flattening out. Then it gave you a horizontal channel. Now you got the first cross, and now you don't buy crosses. You use it for helping you to identify great pullback areas. Because I don't see you use many indicators like VWAP, RSI, volume profile, etc. I do use some volume profile, especially on the futures for the indices. It's just too much. I'd be here showing, if I went through everything I did all the time, I would literally I'd be on live streams all day long. And I'd get inundated with questions. At some point, I'm going to add some more stuff in here. Maybe I'll figure out how to do that. But I do use some volume profile. I do use the VWAP for intraday trading. RSI I do use, you see it down here. I use a shorter term RSI, especially watch for overbought, oversold conditions and divergences. But they have to be against key levels for the most part. But if I was going to go through everything, literally I'd be on 8 hours of live streams a day. For teaching purposes, can you look up Luna? Yeah, remind me in a second. I just want to get through. I want to take a look at Costco because I put them in my tags. Costco, and a lot of people will be looking at this. Down a bit, but I'm still going to be watching. This is interesting because again, you got up, you filled this gap. Again, this was not a strong close on Costco into earnings, but at least you filled the gap and then you have an advanced clear path move. So as long as it can really hold the rotation zone, I will be looking for a potential rotation entry up. If it starts dropping below, again, about this 515 area, not interested in Costco at all. Just for everybody. Let's see what they did with earnings, though. They beat pretty well on the EPS and they beat on revenue. Again, we're getting a slight pullback. And then in weak markets, that's off the table. But we start bouncing up again. This is something people aren't going to stop shopping at Costco even with inflation. They're going to need to still shop at Costco, just like we looked at Kroger the other day. Going to need to still shop at Kroger. And this took a while building a base and that pop above that little base. So I am interested in Costco. I also want to do MP materials, and I'll look at some other stuff because that was brought up in the last live stream. MP Materials is an interesting one. Again, I don't know a ton about this company, but this is one I trade like metals, and I know you got the only mine in for rare earth minerals. I was doing analysis on this from a technical standpoint, and this is one I trade like gold and silver. As long as we're in this range, I put on my retracement harmonics, and I trade between them. So, for example, dropping back to 37.24 would be a potential buy for me. You rally back up, unwind some at 42.59. You rally back up, unwind some 47.81, and I fine tune those levels with recent price action. But then you pull back, add back, reduce. And where would now, if we started dropping back below 26.60, that would be a stop on my position. I'd watch for lower prices to restart my add and remove. And why do I trade these kind of things with adds and removes? Because there's a lot of choppy back and forth price action here. So you can easily add, remove, and you're taking advantage of sort of price harvesting. This goes back to when I traded pairs. And this is the way you do a lot of pairs trading, and I just call it price harvesting. You're using your harmonic levels to harvest price between them. So you're patient, you wait for, now if there's a great technical pattern in there, yeah, I don't need it to come back to a level, but the next level I'd be watching is the rising 200 with the 37.5% harmonic. But this is not something where I'm sitting there going, okay, I'm going to try to ride the whole position back to 53 bucks. Why? Because look at the chop back and forth. Just like in silver and gold, you can take advantage of this chop back and forth to add and reduce. Oversold stocks, McDonald's, C, and PayPal. Again, I looked at PayPal earlier. Yeah, they're oversold, but this thing can keep getting oversold for a while, and it bounced out oversold on my RSI. Again, there's an aggressive buy above today's high, and that would only be for a return to the weekly rotation zone. In the longer term, I'd watch for another roll down. MCD, by the way, is very interesting because this is a horribly sloppy pattern. But because of all this chop in the way, I wanted to take a look at something, though. I was going to do this analysis earlier today, and I did not. So I guess I'm going to do it now. That's how I already knew that there was a horribly sloppy pattern potentially here. And that works. See, it's reversing this move. Even though with all these little hitches in here, now it's interesting. Your first target is right near these peaks and this right here. So this could take a while to unfold. But here you see first cross rotation zone, minorly oversold. But this would be something that is definitely shortable longer term on rallies back up with a longer term bearish pattern. So I would not be looking to aggressively get in anything McDonald's because now I'm fighting a higher time frame pattern. And even on rallies, you got the declining rotation zone, you got return to the neckline. Where would it have to, before I change my opinion? It would have to move back above. This is what we call a fail-safe trend line for this kind of pattern. So it'd have to get back above there and retest it before I'd get interested at all from the long side. And it's now below the 200-day, so that's resistance. So the neckline, look at the beauty of here. Neckline, declining rotation zone, 200-day. So even on a rally back up here, I'd watch for another rollover, and that's definitely playable to the short side longer term. And by the way, this is, you see here, no double top because it's not reversing a big enough move. That was a bearish pattern when it broke below there, but you can't use the targets for the double top. Yes, that's not looking strong right now. Your problem with this is you have major resistance now that was broken. I wouldn't be touching this right now because this would have to really prove itself back above the daily rotation zone, which is a long way off. And you just broke this major support right here, becoming resistance, and you're actually back below this other support level too. So this is nothing I'd do from, even on a bounce, nothing I'd be touching. Not a strong pattern. I'd be more watching for sell plays in that longer term. Overbought stocks, ABBV, and there's your Kroger. I looked at that the other day. Yeah, now that is massively overbought. So this would be, but this long term, I'd watch for a pullback play in this. But this, I would not do anything on a short term basis in Kroger at this right now. That would be utter insanity. This is, and that's just an insane move. So would not touch that at all. ABBV. Haven't looked at this one in forever. Forever. Yeah, that's getting, we got divergences up there too. This would definitely be something to watch on a pullback. Yeah, we're getting really overextended. I'd be more interested in watching at that on a pullback. Would not touch anything with it right now. It'd just be chasing it, and your stop has to be way too far away. Reward to risk, trying to get into this move at this point with reward to risk would just be silly. It looks like you almost have a horribly sloppy double. But let me get to some other stocks here. What else do we have? Let's see. XME. Oh, yeah. There's your S&P Minerals and Mining. This, I longer term bullish once it broke above this. I forgot about this to mention this, but we had you broke above this retest of the breakout area, and then just again, you don't want to chase this stuff at this point. I'm not saying it's coming back here, but geez, look at this weekly. A lot of these will pull back. And that's what I'll be watching. That is really, really, I mean, just your 1 hour rotation zone is all the way back at 55. Let's just see. Whoa. Why I put up those is because I'm watching for when you get this vertical, my key area I'd be watching is right around the halfway point of this up move for a potential reload play for the long position. What else do we have? Are those two stocks STLD and SQM? Steel Dynamics, yep. Again. Now this one's interesting. This one's really interesting. And this is a great area by, you'd ask about reverse harmonics. Here's a great area to use reverse harmonics. And look at that. Move up your stop. Just hit the first reverse harmonic level. See, because this is definitely why does this catch my eye? Because it made this high. You had the double top, pulling back. You broke below this base, but it's almost a shake and bake pattern where, all right, you thought it was getting the flush out move. It reverses this whole side of this horizontal channel and then goes on to new highs. So this is definitely a potential viable play on a pullback. Again, educational purposes only. Everything I talk about here is educational purposes only because I can't give you exact trading advice. I don't know you, your account, or your trade durations. And I'm not licensed to do that. I am licensed to trade for me and to, I guess, do a YouTube channel. So yeah, Steel Dynamics, really nice for a pullback. SQM. This is another nice play. This is definitely playable. I'd watch for this on a pullback too. Boy, I wish I knew about that off that double. Then a resumption of trend. This has some volatility in it though, so I would definitely not chase this. But I'd watch if you get this gap fill in here. That could be a really nice play. And this is another one, reverse harmonics. Almost that first harmonic with that little pullback. I'd just move up and stop anyways. And I'd be watching right here for a potential some kind of re-entry play back around that area. You got a gap fill. You don't even have to go with a full gap fill. I'd have to fine tune a level in there, but it's probably right around there, 66.50 area. You start getting back in there. I'd watch for a potential play, but you have to keep a wider stop in this thing. Definitely a wider stop in SQM. Let's see. Raj, thank you for the super chat. You're welcome for the Tesla plays. I hope with some of this other stuff, I got you on some other good plays too. Let's see. Boy. Let's look at some of you. This is where you don't have to do, Raj, great member of this channel. This is where you don't have to go back to your PayPals and everything else and your SoFis and the stuff that people were trading, successfully until this massive rollover. Find some of this new. Find these commodity plays. Look at this. Add this one. CMEX. Break above highs. You got this little mini double. So I'd watch there in a gap fill. But this could be something, once it gets above this high area, definitely playable to the upside. And by the way, if you're using harmonics on this one, come from this low up to this. Don't use reverse there. That's your forward play right there. So there's your stop raise and or potential profits. Again, I'd be even interested in if this triggers this little double for a quick little pullback play, and then on a move up resumption of trend, that could be a really good play to the long side. You're getting some great stuff from Raj tonight. STLD, yeah, we already did STLD. Sorry, ZEUS. Zeus is a little trickier. Olympic steel. I wonder why they're called Zeus. Now, here's why it gets trickier. You're coming up into this key resistance area. You get above that resistance, I'd watch for a retest of that resistance, and then you're into an advanced clear path move. Conversely, if you stall out here, and this would not be a buy where it is right now for me. Why? Because we have significant overhead resistance. Now, if tomorrow it breaks through and then we get a little pullback, that and a rotation up, that's a buy signal for me. Why is it not a buy here? Because this is no man's land. Where I'd be watching for a buy is on a nice little pullback. Look at this 4-hour rotation zone in this prior topping area. 28, 28.50 could be, educational purpose only, a buy area. It's right there, and you clearly have a great stop level because you can keep a tight stop with this because you start getting below this little pausing bar right here. You're back below the 200. I'd even go right here with this support or resistance shelf becoming support. So my stop would go slightly below there because that below there, you're back below the 200. You're back below this shelf on a stop basis. So you could keep on a pullback a tighter stop. So it's either pullback play or it has to follow through, retest this area, and start moving back up. And then it's a longer term play for Olympic steel. RYI, again, great time. There's your reverse harmonics. There's your stop. This is playable even on a pullback. Another pullback play. Again, I wouldn't get in all of these. I'd pick something that's your favorite or that you do your own analysis on, because you don't want to put everything into all steel plays. All right, you don't want to do that. You want to choose one, maybe two. You could always split play. Let's say you do 2% per trade or 2% per investment. You could always do two different plays at 1% each. If you want to go a little heavier, you could go 3% between two plays at 1.5% each. But I wouldn't be doubling or tripling or quadrupling up on all these. And again, your major support here, 27. But right now, even on a pullback to 30s, if it holds with a rotation back up, there's your target. Those are your stop raising targets right there. Let's see. This is contract drilling, industrial services. Yeah, this is, again, playable above. You see the theme at the Raj great charts today. Everybody thanks Raj in the chat, please. Playable on a pullback. Definitely playable on a pullback. This is where I'm going to use, I need to really zoom out for this one. Look at this longer term. 200 week. I'd possibly watch for a slight backfill in this one. Especially if oil pulls back, a slight backfill in this one. But then you have a really nice area to run into up there. Just want to see where these longer term harmonics are. Yeah, I would not ignore this area. If you're already long this, do not ignore about 39.25, 40.22, and then you have a gap fill up there. So that's back. But even on this pullback, your weekly, look at this, how long it took to make this resistance base that you just broke out of. So anything on a pullbacks are potentially buyable. Baker Hughes, yeah. Oil field services, again, that's going to be bullish. Again, I'd watch for, with any oil weakness, I'd watch for some pullbacks in these. 28 level is definitely a pullback area play. You're above all your key resistance. You're above your moving averages. You're into a clear path move. Next target about 34. And finally, CSL. CSLC, now this, this is the least interesting to me. Now, if it got above this 250, I'd be interested. Right now, you got a potential double. This could be interesting, but this would be lower on my list. It has to prove itself out first. It's come a long way. You got divergences in here. Even before this pullback, you got divergences in here. And we have a potential double. That won't prevent me from playing it, but this has to show a little more strength to me. That's your weekly bigger play. And even see if you take this daily play, even above 240, all you're doing is running back in this overhead resistance. So I'm not crazy about that one. Yeah, and I already did MP material. Let me know if you wanted me to. I think it's, again, just to recap with MP, that was this one because I didn't see that question before. This is one I definitely playable, but I'd look to add and unwind between key levels. I'm a huge fan of TPO volume profiles. Volume profiles is very handy. You can get a lot though from stopping points and clear path moves without, if you don't want to get into volume profile. It is very helpful. Late today, did you take a peek at Walmart? I will now. Again, glad to have you, Walmart. Not a double. Why? Because this is the move it's reversing. Walmart, I'm just not interested in yet. There's better or retail plays for me, and it's not Walmart. Even though I could see it easily returning to the 200, it's got to do some. It's got to really prove itself to me again. Walmart is eh. Now getting above the 200 and retesting that for support. The problem is, the upside targets. I'd rather. There's other stuff I'd rather do. Like, I'd rather get into some targets, something like Target, which gap up on earnings. I'm watching to see if this holds, and then even a slight pullback in this. Longer term, I'm more bullish on Target at this point than Walmart. How can you be boring? I'm loving teaching and training details. Well, thank you, Ahmed. Some people are probably bored off their pants by this. This is like one college lecture I want to sit through every day. I hope that's. I didn't want to sit through college lectures. Agreed. I mean, this is good stuff. A lot of hidden gems, and even though the course is still not out, there's a lot to learn from just watching the live streams. I teach a lot in this live stream. You know, of course, when I release it, you're gonna go, oh yeah, you talked about that in the live stream. Oh yeah, you talked, but it's gonna be great reference material. So, and you're gonna get to support the channel even more. Hey William, I took a look at Apple. Did you catch that? Do some research on Linneus Rare Earths Ltd, Australian Rare Earths. Okay, I will take a look at that, Raj. Thank you. Thanks for the insight on MP. I'm glad you caught that. We all can't be like Kathy Wood with endless money to lose. Buying these dips is a risky game. Yeah. And she'll eventually run out of money. Where is ARK today? Again, we looked at that earlier, but that was a rotation back down to that 62.5%. There's no way I'm touching this longer term. Back to the weekly rotation zone. Couldn't even get back to that 200 week, and now weak again. This is just trash long term. Sorry, Kathy. Not a technical fan of your stock. Boeing, please. Yeah, I knew that was coming. I knew it. Boeing sitting against that's done now. Only got to that first target. This is very critical. Wow. Any long play would have to be with a super tight stop. Why? This is not good. You still have a major gap down here. Boeing's got a lot of bad press. Right now, this is technically looking like it's a potential short. Below about 188.85. You don't have a clear path move, but you do below here because a gap makes up a clear path move. But you start backfilling this, you got lots lower targets to go. And look at this with the 200. Couldn't get above it. One day above it, reverse below it. One day above, reverse below. And that's, remember, it's an area. Couldn't get above on a closing basis. Bam. Now it's looking like breakdown. I would not touch this. I would not touch this at all. Even on a bounce, it's not worth the reward to risk because your upside is, you got the declining. Ignore the rotation zones when it's in here, but I do not ignore the 200. So, oh, that's just ugly. And there is no double bottom play on there. So there's nothing to the long side. I'd be actually be looking at this to the short side. That could be a really nice short play. Hey, Christoph. Thanks. I'm glad you're learning. And then anybody donating is optional. It always helps the channel, and it helps when I go through stuff. It, especially even for my time. But I'm glad you're still learning. Kathy needs to change up her strategy faster. She'll have massive redemptions. There was still money flowing into it the last couple days on that ramp up before the sell off again. People just never learn. Again, you want to put money into something, go look at some of those steel stocks that Raj put out. We already took a look at Tesla earlier. So you get my detail. Here's the key thing. I'll just recap it real quick. Your key resistance is now about 850. It'd have to get above there before I'd be interested at all in anything. And we start breaking below about 8. You could even go down to this harmonic below 826. I'm watching then into this clear path with a gap fill and then a target of about 795. And then the major area you're watching is the 771 area for the 62.5. For any bullish play, keep in mind you're against the weekly rotation zone and the daily, which you ran up to, rotated back down. The only thing that changes that short term is if you can get really starting to get above this, really to get bullish above 875 again. I went through Apple earlier. Arsh, is that, I don't want to mispronounce your name. Apple is in no man's land right for me right now. Above today's high, you have this little quick play, raising stop 170.73, then 172.53 is the next target above there. There's nothing to the short side yet until we get below about 162.80. Then there's a short play down there. So right now, if we just open in this range, there's nothing to do yet. There's no strong technical patterns. Above this high, though, there could be a little run to the breakdown zone. I went through the detailed analysis on that. So if you want that, watch the replay of the stream. I spent a fair amount of time on Apple. MCD, a weekly trigger, or did trigger already on the daily? The weekly looks like it'll trigger this week. And again, I'd wait, because unless we get a rally above the neckline tomorrow, which would be massive for McDonald's, this would just be, I'd be watching for rallies to put on, like put positions, put spreads, or something else, or any bearish position. So it's going to look like, again, we have to wait till the technical close tomorrow. On a daily, yes, it triggered. It triggered, it technically triggered. I hate up candles like this to trigger them, but if you waited for a down trigger, a down candle, it triggered back on the 1st of March. So that is triggered. And if you can't get reward to risk, that's where you wait for some of these rallies and then you establish a position. Thanks for posting those in Discord. Again, if you're not a member of Discord, you should definitely join, even to go get a recap of Raj's stuff. Mike just jumped in late. Not sure if you've done these already. If not, can you do Spies and Queues? I'll do fine-tune my charts to get your thoughts. Spy, again, and oh, this is where the futures are going to be a little more key. Although if you break below 43, what was the low? Inside bar right there. It's where I'd like to do the futures so much better. So much better. If we get below 430, it's in really bearish mode for me. Above, first sign for anything bullish is above about 438, but really then I have to get above today's high. Then you're into this little move here, and I target 445 on the spies. More aggressively, See, we're in this chop. It'd have to be. Yeah, there's not much until you break below that 430 area. Now the Qs are a better play to the short side with this weakness. You start getting below about 340.50. Right there. Look at this reaction. You see how that's significant right there. So 340.79, you could probably go down to about 340.50, just below there. Then you're into this clear path move to the downside. That's definitely playable. Look at that with the pausing area. There you go. That's the great play. Now to the upside, above 350, that's the only play to the upside. You have this gap left behind. That's the only play is if it's above 350 to the long side on the Qs. So it'd have to be a little break. As long as this is in this range, not touching it, it would either be a breakout or a breakdown play. I actually like the pattern in the Qs right now better than the SPY. And that could definitely be a stop raise right there. I don't know if you caught Tesla the second time, Oliver. If not, you can rewatch this broadcast, how I use Harmonics lower on Boeing. Harmonics lower on Boeing. So for a potential short play, again, this is where I'd use these harmonics right here. And look at that, you have the harmonic coming in right with that gap fill. So if you're applying this to a short side, I'd use about 172 as lowering a stop or taking a partial profit. 160 would definitely be with a gap fill, lowering a stop again and taking partial profit. Major area then would be about 145. Those would be my minor areas for breakdown plays. But definitely, if you were playing this to the short side, they'd be using those to lower stops pretty aggressively on this. You are very welcome, Wavy. Maybe tomorrow would be a good day to everyone trading. Let's end the week on a good note. Yep, let's end the week on a good note. With that, you know what I'm going to say. If you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and subscribers and Discord members, please do leave some comments and hit that like button. We got one more comment from Options 22. Kathy's nonstop flow of funds is coming from Gen Z. The market stocks have only gone up since 2009 when they were just crawling. Like Kathy says, if stocks don't go up, just wait 10, 15, or 20 years. Well, some of these companies won't be around. So, and guys, that's what I'm trying to get through. If you're in, some Gen Z or you're playing, I don't care if you're a new trader within the last even 5 years. Stocks go through different periods. You don't have to go back to the well when the stuff's not good. All right, we just went through a ton of plays. Thanks again to Raj for a lot of those. He showed you a lot of great potential steel plays. There's potential oil plays. There's ag plays, DBAs. Oh, NTR. That's what I forgot. I can't finish this up yet. NTR. Nutrien. This is ag chemicals. Look at this move here. Hitting our harmonic right there. This is definitely playable on pullbacks. Would I chase it here? Not in your life. Playable on pullbacks? Definitely. There's another one to add to your list. NTR, even back to this 50% level, which is the weekly rotation zone. Yeah, it wipes out this move, but I'd be watching for, again, we're in a multi-cycle year bull market. Ags are strong. Chemicals are having an issue. Fertilizer was already strong before the Russia-Ukraine situation has only gotten stronger. So these are I'd even doubt it would pull that back that far. I'm going to start watching for even a 25% pullback and then a potential bottoming pattern. But these are little things. Nutrien, little great play right there. I agree. Share with your friends. Share with your family. Let's get Mike out to the masses. Just get this channel out to the masses. You are welcome, Options 22. You are welcome, Michael. With that, I am wrapping it up. Oh, it's been a long time, and I got to take 5 different dogs for a walk. I will talk to everyone later. Let me know your thoughts.